In this video, I'm going to be telling you what a moving average is and how you can use one to get into and out of trades. So if you're new to this channel, I like to keep things as easy to understand as possible because I believe that trading doesn't need to be overcomplicated and anyone can learn it. So if you're after really easy to understand demonstrations, then make sure you subscribe to this channel. If you're not new to this channel, then you will know that doing these screen share videos for you and doing these demonstrations where I show you the charts is something that I've been wanting to do for a really long time, and this is the first video where I'm actually doing it properly, so I'm really excited to be able to do this for you. And I thought the moving averages was a really good indicator to start with as a demonstration. I use moving averages all the time. Some of the indicators that I'm going to be doing demonstrations for you, I won't use myself, and that's not because they're bad indicators, it's just because each trader only really needs to use a handful of indicators at any one time. They don't need to use all of the indicators all of the time. So just because I don't use an indicator doesn't mean it's not worth you understanding and learning what it is and how to use it. But moving averages I do use frequently, and I thought that they were just a really good one to start with because so many traders do use them. So what a moving average is, it's a line that's drawn on the chart to show you the average closing price of the last however many candles. So you can see we have a blue line on this chart here, this blue line that's moving along with the candles, and this is a 50 MA. So this is a line which shows the average closing price of the last 50 candles. And how we get this up in TradingView, we go to indicators here and then you type in moving average. And there's lots of different moving averages. I actually like to use exponential moving averages, but I'll explain what the difference is in a different video. For now, let's just use a simple moving average. When you click on it, you can see that another line appears, this kind of pale blue line. And this one here, you can see is a 9 moving average. So 9 is the default setting on TradingView. You'll want to adjust it because 9 is quite a small number. You adjust it by going in here to settings, and then you can adjust the length. So this will be the closing price of the last 10 candles, the average closing price of the last 10 candles. Sorry, now it's gone to 2, which is really low. But you can see as you move the number up, they move further away. I don't know why it keeps moving itself. That's very annoying. You can see as you move the number up, the line moves further away from the candles, and that's because it's taking into account more candles and therefore is going to be less sensitive to the most recent ones. So obviously the higher the number, I don't know why it's doing that, it's really annoying, but if you do say 200, you can see that it's really far away and it doesn't even seem to be following the candles at all. I'm going to cancel this for now and just close it down because we only really need one for this demonstration. So we're going to use a 50 for now. We're going to look at the 4-hour chart, but you can use moving averages of any length and you can use them on any time frame. This is just for demonstration purposes. So how you can use a moving average to get you into and out of a trade is because they can give you the direction of a trend really easily. So for example, when the candles are below the moving average, you are in a downtrend. When the candles are above the moving average, you're in an uptrend, and here they start to go below again. You also get ranges, and that's when the market moves sideways. So you can see here we've got a mini range when the candles are closing above and below the moving average, and the moving average is going sideways. So you don't really have a direction there. Well, you have sideways as the direction. I wouldn't start with trading ranges when you first start. I think trend trading is a lot easier for new traders. And that's when you're looking for a simple buy or sell. Buy if the market's going up, sell if the market's going down. And what you can see is you want to start looking for when the candles start to close above or below the moving average for the first time to get you a direction change. So in this example here, we were in a bit of an uptrend here. Now you can see here that the candle closed on the moving average rather than below it. So this actually wouldn't be a good entry trigger for a sell position. But this next candle, which does start to push the market down, does close below. So you can see that the wick of this candle came below, but it actually closed on the moving average. So that really wouldn't have been a good trigger, but this one here would have been because it definitely closes below. And then we get another couple candles coming down. We get pullbacks up towards the moving average, and this is completely normal. This is just normal price action. This always happens in trading. You're not just going to get a full run of bearish candles as soon as you enter into a sell position. You are going to get ups and downs, and this one actually goes sideways for quite some time before continuing to fall down. Now this pullback is a little bit annoying because you can see it starts to close above the moving average. So what I would actually recommend in a situation like this is that you actually close the trade, because it's very easy to see here that we are in a downtrend and it continues for some time. But when you don't have that information on the right of the screen, as far as you're concerned, the market is starting to move up as it's starting to close above the moving average. So you would have actually exited the trade here, and that would have still got you a good amount of pips if you went from here to here. It wouldn't have been the best, and unfortunately, you would have had a lot more to go if you'd have held it, but you don't want to be holding trends. You don't want to be holding trades that look like they're moving in the opposite direction. So that one would have been slightly annoying, but let's have a look at this one here. Once you've hit the bottom here, it starts to consolidate for a little bit. And then this candle, this long-bodied candle, closes above the moving average. So again, this would be a trigger to get in. And you can see that you have little pullbacks here. Again, this one looks like it came down. The price moved below the moving average, but it didn't close below it. Therefore, we are still in a buy position. And you can see this one actually goes very nicely up for some time. We do get these pullbacks towards the moving average, but we don't actually get them closing below until here, where it closes below. And that would have been your exit trigger for that trade. And then again, you've got a nice downward trend here. It moves up towards the moving average, but it doesn't close above, so you can hold it. And even to the present hour, it comes right up to the moving average, but doesn't close above it. So you could still hold on to a sell position there. So those are moving averages. That's how you use them to get into and out of trades. There are loads of other ways that you can use moving averages, and I'll be doing lots of different videos. This is just the first of many that I'm going to be doing on moving averages. So if you don't want to miss those, make sure you subscribe to this channel so that you don't miss out. And if you enjoyed it, give it a little thumbs up, as it's good for the YouTube algorithm and it means I can carry on creating this free content for you.